Happy Hump Day here on the morning show. Spencer, JC, Steve with you. Chartmaster Rick running our charts for us. We appreciate that. Good morning, YouTube. Good morning, Twitter. Good morning, stockmarkettv.com. What do we want to talk about today? I want to talk about earnings, but also just earnings reactions, right? If you had listened to anybody, ourselves included, on the morning show or yesterday at any time before the open, you would have said, JP Morgan, the report, yeah, it was fine. Well, the market didn't think it was so great. So we're going to talk about the reaction, why that matters more than the numbers themselves. We do have, pretty much from this point onward, have a steady stream of earnings coming in every single day, which is exciting. It creates action. It's like game day. It's kind of how I think about it. I don't know what's on JC's mind. I don't know what's on Steve's mind. Maybe we'll talk energy. I don't know. What's wrong with my hair? What's wrong with my hair? Oh, shit! Don't look at me. Don't look at me. Okay? Don't look at me. JC, are you here? Steve, you here? Come on.
You guys look at a lot of charts yesterday?
No more than usual. Strazza's here. His camera's off, but he's here. No more than usual. I don't know. You? I don't know.
Just seeing things that haven't been seen in a while is all.
Oh. Okay.
Certain strength in certain areas that we haven't seen in a minute.
Say more.
Certain weakness in certain areas, haven't seen that in a while. I don't want to ring the alarms here. You know how dramatic the Twitterati can be, but nevertheless, it is. There are a few cracks, and listen, not every little crack needs to turn into a monster correction. But you go back 100% of the time historically, every monster correction starts with that first couple of cracks. That's all I'm saying.
So you're talking about like the price action software? It sounds like.
I mean, I think that's part of it. Like when you're looking
banks?
at culprits, like what's going to be the culprit for this one? Who's at the top of the leaderboard right now? Who's the number one contender for the culprit? Certainly, software's got to be in that conversation. I couldn't even tell you what number 2 would be.
You talking about banks?
Maybe banks, financials getting hit pretty hard. I haven't seen something like that. JP Morgan getting smoked yesterday.
Yeah. You think these are new cracks though?
Here's what I think, and I don't know anything. I'll be the first to tell you I don't know anything. Here's what I think. You know how like last year, like every sector was up, right?
Mm-hmm.
Yeah.
Every sector was up last year. Nothing was down.
Yeah.
Some were up more than others, right? Like technology was up a ton.
Mm-hmm.
And here I'm looking at the returns right now. Yeah, everything was up, right? Some of the worst ones were up a little bit, and some of the best ones were up a lot. Everything was up. I think this year, what you're going to see is that K shape. Hey, see what I did there? You like that?
K.
Come on, guys. Like K shape. Like there's an economy that someone named once that's a K shape where like some people are making a lot of money and some people are not,
Yeah. No, I've heard of it.
K is the letter of the moment that we're in right now.
Come on, Strazza, this guy. Yeah. Come on, this guy. So I think it could be a K-shaped, sector. I think we can have not like quarterly dispersion, like an annualized dispersion for 2026, where you got some big winners, you got some big losers, and then a couple somewhere in the middle. I think that's what's going to happen.
So again, I would just ask, where are you seeing that besides software? Because that characterized the whole year last year. Semiconductors were up 50% at the index level. Software was flat or negative on the year. So it already happened.
We're 2 weeks into the year, bro.
I'm
just saying. I think that there's a lot more going on this year, and I just think that as investors, you, me, everybody here, that we're thinking about how to allocate money. I think, in my experience, from what I'm seeing generally, I believe that we should be approaching this year leaning towards the fact that we should expect some big winners, expect some big losers, and some nothings in between versus everything up just more than others. That's all I'm saying. And I think it would be advantageous to investors to think more that way in 2026 than perhaps the other years.
Based based on just the price action in some groups,
I mean,
right?
based on the current trends,
Okay.
like based on the current trends of the market, the bases that haven't broken out yet, the extended nature of some trends, you know what I mean? Like maybe some mean reversion action in 26.
So you're saying everything's not going to be all bunched up, right? Last year, most sectors were bunched up. Tech was an outlier. Energy, staples, real estate were outliers on the downside a little bit. Not crazy, but a little bit. Everything else was.
They were just up less.
Yeah, I know. And everything else was just bunched up in the middle, right? And then you really could just, they're all like a percentage point or two apart from each other, right?
There was a lot of the offensive sectors led, except for discretionary last year.
So you're saying just more dispersion, which this year we've already gotten that.
I think there's going to be down sectors. I think you're going to have negative returns in certain sectors in 2026, and you're going to have outsized positive returns in certain sectors in 2026. That's what I'm saying.
Probably talking about value groups, some new ones. Probably going to get the outsized returns for a change.
I wonder what a basket of energy and consumer staples is going to look like 12 months from now.
Yeah.
Relative to other sectors. We could see a 20% year in staples, 15, 20% year in energy, 10% down year in technology. That wouldn't be surprising at all. I have no idea what's going to happen, obviously.
Rob Forge says it's an interesting idea to think about. I agree. I would just say, things are probably as good as they have been in several quarters, with discretionary making new highs, high beta making new highs, small caps making new highs, breaking out of a monster base. ARC.
Can we get to the state of the
breaking
markets?
out of its
Silver
consolidation
is 91,
fade.
bro.
Wait,
what?
Yeah. Can we?
Actually,
Staples had
JC,
3 good
doesn't this
days,
kind of
bro. Calm down? Staples had 3 good days.
Go
Don't get your.
Yeah.
We're working with Strazza's internet here. We're doing the best we can.
Well, JC, what I was going to say to you though, but like you like to say how like in bear markets, the good part about them is that like the bad stuff has already happened, right? So it kind of can only get better. Obviously, it can get worse too, but like when you're like in the throes of it, when you're down 20%, you've already corrected 20%, and like you're already down in the gutter. The vice versa, the bad thing about like bull markets is like how much better is it going to get? We're already in the good. The good is now, right? So
yeah, for the way I like to think about it, it's not so much good or bad. It's more the character of the market. Not so much good or bad. It could be good if you own the stocks doing well. It could be bad if you own the stocks that are doing poorly. Right?
Yeah, that's fair. Oh, different.
Yeah, that's what I mean. All right, let's do a little state of the markets.
Yes, let's do that.
All right, serious action yesterday in the crypto assets. Man, what a move that was. We got the Dow futures this morning down 1/3%. Never quite made it to that 50,000, which is a bummer. Big round number gets people excited. 49,250 for the Dow, down 150 today. S&P's up. S&P's down 40 basis points, 69.74, back under 7,000, down 28 handles. Nasdaq 100 futures down 0.5%. Leading the way lower, 135 points down, 25,770 for NASDAQ futures. We got 30-year bond futures flat, just under 116. Crude oil up another 1%, 61.76. Holding that 60 level. That's a big one. Copper still above 604, up about 1/3%. Gold up another percent, 46.43. Wow, gold. Silver up another 6%, 91.74 for silver. Wow. Wow. I mean, that is, I don't say that often, but that's real. And then the VIX ripping. VIX above 17, pricing in over a 1% move for the S&P 500 per day. Just an FYI. Wow. All right. So let's see. Funny money land, 25,000 even for Bitcoin flat this morning after a big run yesterday. 3,300 for Ethereum, also relatively flat. And then the old Solana 144. Pretty much everything's pretty much flat this morning. 3.2 trillion total crypto market cap, Spencer. How do we feel about this morning's futures?
Super bullish. I haven't felt this bullish in many, many months. I don't know if you.
Bullish
if
what?
What?
But what exactly are you bullish on?
He's
So,
bullish his portfolio. Duh.
Well,
yeah, well,
yes.
we know that, but
Big-
what's in it?
Big week. No, I've been in up to a 20% drawdown that began in late September. I had an awful finish to an otherwise great year, and frankly, it has sucked. And I'm still not back at new all-time highs in my trading account. We're close, getting real close. But I've been in drawdown mode for over 3 months now, so it's been really shitty, actually. Good start to the year so far. I'm bullish simply because so many of the things that were on our like wait and see list last year are now checking the bullish. They're on the bullish list, right? So
Like what?
discretionary, right?
Yeah.
Wanted to see that breakout. Got it. I think you got it nicely too.
Throw up slide 3 there. What does this mean to you? I know I'm more old school than you, but you know, for us old school guys, this one stands out. Is there anything to be alarmed by there? You know, so we're looking at the S&P 500 up at the top, and we're looking at consumer discretionary relative to consumer staples at the bottom, right? So in healthy market environments, consumer discretionary tends to outperform consumer staples, as it did until November, right? So through October, you saw higher highs, higher lows. And then since then, you've seen a few things since October. Q stopped making new highs. Technology stocks stopped making new highs. Large cap tech stopped making new highs. Also, consumer discretionary peaked relative to consumer staples. Right?
Yeah,
Since
but
those levels.
this doesn't necessarily contradict what Steve just said, right? Because this could just mean that staples have been inordinately strong. But
Strazza's right on the consumer staple front. I brought out a bunch of charts yesterday. Totally agree. Now, with that being said, on a relative basis, not able to get the job done on these new highs. Strazza, do you care?
oh, Steve, you're killing me, Smalls. You're killing me.
These
Short
Florida men,
Comcast, short Verizon, short Comcast. I don't know who his internet provider is.
they're all terrible.
Short
They're all
AT&T.
terrible. How
God.
about the next ones? So this one's really interesting, right? So then go to the next one. So then here you go. Actually,
It's not a bad idea.
all right. So consumer staples relative to financials. Why do we care? That was a big move from JP Morgan yesterday, right?
Huge.
And in healthy market environments, this line should be going down, right? Financials, the banks. We don't have bull markets without banks. Financials. They should be doing better than the toilet paper and the toothpaste and the condoms and the potato chips, right? Those are the consumer staples. Tobacco, alcohol. These are the things that consumers are going to buy no matter how bad things are. If those things that they're buying, canned goods, right? Freaking Tyson chicken and things like that, if they're buying those, Procter & Gamble, at a faster rate than they're buying the banks, right? And there's rotation there. That type of rotation historically takes place in an environment that stocks are under pressure. So I ask, I don't know anything. I ask the question with these lower lows in the staples financials ratio, which is perfectly normal in a healthy market environment, and this massive, massive bullish momentum divergence, massive going on here on the weekly RSI, something to monitor. And the last one here is something, you know, I look for changes in character. I look for things that we haven't seen in a while. I look for new things. This staples thing is a new thing. Discretionary's not getting it done relative to staples there is a new thing. Magnificent Seven making new 4-month lows on a relative basis, falling back below those 2024 highs. That is a very new thing. So if you're looking for changes in character, look for changes in character. Like people say that, but like, are you actually doing that? So I actually do it, and I don't know what the market is going to do. I have no idea. But what I can tell you is that these are new things that we haven't been seeing before. And I think it's worth it's worth monitoring. I think there's something there. So that's what I'm thinking there, Spencer. What do you think? You think I'm crazy?
No, I have to admit, I I didn't have JC. I don't want to say you're sounding the alarm because you're not, but I didn't want to. I didn't have like cautious JC on my bingo card this morning. So this is a surprise to me.
Yeah,
Not in a bad,
again, it's not
not
so
in a
much
bad way.
cautious. It's not so much cautious. It's
Yeah.
not so much good or bad. It's not about that. I
Yeah.
think it's more about a change in character and thinking about what types of stocks will do best in an environment where you got this stuff going on, and which types of stocks are going to do poorly in this type of environment, right? So, again, I get it, good or bad. It just depends. Like if you're this is $20 trillion in market capitalization. Okay, the Mag 7. You add all
Yeah.
those 7 companies together, it's over 20 trillion. That's
Yeah.
real. That's that is a lot, right? So when you think about it like that,
Well, I get what you're saying, but also that discretionary staples chart, which you put on the screen right after Steve said he was making money in discretionary, those two things don't necessarily are not at odds because staples have been inordinately strong this year, but so has discretionary. They've both been good this year.
yeah.
So
Staples even better somehow, and
yeah,
not
just
able
a,
to,
just a little better in the last few days. Just a little better, Strazza, are you on mobile? Is that what we're doing here?
Yeah, I just want to get this one thought across that I've
Yeah.
tried 3 times now with my crummy internet. The discretionary staples ratio doesn't concern me at all because you got to look at what's going on under the hood of that relationship. Discretionary stocks look great. Breadth is expanding in that sector, breaking out to new highs on an equal weight basis, large cap basis, whatever. And then meanwhile, staples, which is in the denominator, have been absolutely destroyed for a year on an absolute basis. And they just had one of their strongest short term performances in recent history over the past 4 days. So you got those two things going on, weighing on this ratio. It's not that consumer stocks, either of them, are doing poorly at all. They're both working really well. Staples just experienced a sick dead cat bounce and had a lot of momentum off the lows. That's weighing on this ratio, keeping it from making new highs right now. I don't think that's not a bearish thing.
Yeah. No, listen, I'm with you on the discretionaries. What I would also point out is take a look at the equally weighted versions of these, right? So you did get higher highs on the equally weighted versions. So if this is going to roll, that's probably going to be a failed breakout there on the so something to keep an eye out for. What do you make about the change in character, Strazza? Do you think this is a change in character or no?
I think the best stocks are giving up their leadership position. So I don't know if it's so much a change in character or just more rotation, right? Like I think, yeah, there's definitely some good evidence stacking up that value and cyclicals are the place we want to be in 2026. But I wouldn't, man, it's so hard to bet against mega cap growth in the Mag 7s. These stocks always bounce back. Just as we start seeing tops on a relative or absolute basis, they dig in, they become leaders again. I wouldn't be surprised at all if you see something like that. You look at some of these tech stocks, they've been killed. They're down on, some big support levels. I'm talking about these software stocks mainly, but even stuff like Broadcom and AMD, Nvidia not at new highs yet. So I think some big bounces there are probably right around the corner.
All right, let's stop dilly-dallying and get to probably the most important thing. And I know you got a few charts, but throw up the silver futures there, slide 2.
And shout out
guys,
crypto. Shout out crypto too.
Yeah, big
nice.
big move yesterday in crypto. But I mean, let's be serious, guys. Look at silver.
This has surprised me.
Yeah, what a
This
joke.
is crazy. Silver now $5 trillion in market capitalization. This was 1.5 like yesterday. Think about it.
As a technical trader, there's nothing I can do here on the long or short side for now. So I'm barely thinking about it. I see all the headlines. Parents are texting me about precious metals. All my friends are texting me about precious metals. I've never seen a more crowded trade, not this cycle at least. So yeah, there's nothing here for me.
Remember Strazza, remember when I bought all that silver in Vegas?
No.
Remember I was in Vegas and I bought a bunch of silver coins. It's like I bought a whole bunch of them. Like, oh,
Yes,
this is the top.
Steve.
Jason's buying
Remember,
silver.
and you guys argued about
Oh,
whether
yeah.
JC knows
Yeah,
anything
just recently.
about silver.
Yeah.
We're like, yo, this has to be the top. Well, silver's doubled since then.
Yeah.
So I really wish I had bought more.
JC was like, I bought silver. You're like, you don't know anything about silver. He's like, yes, I do. I know everything about silver. You're like, no, you don't.
We were saying it was the top when we were getting my dad the precious metals bars from Costco. That was a long time ago now.
Well, I haven't sold any metal stocks. When should I start feeding the ducks?
Oh, that, sir. You've been lucky if you haven't sold yet. I've been selling all along the way.
I got the Buenaventura, but look at that chart. Why do you think I've held on? It's a huge base, right? And then the Siboney.
Yeah, I feel like you're safer in the international stuff for sure because you got.
You're buying metals. What do you buy? American metals companies? Like how many are there? One?
Yeah, I'm in a lot of these dumpy junior gold miners that have. I mean, they've gone crazy. Some of these things I'm looking at, they're up 5-6x. So I just take them all off when I see that. I'm probably holding a handful, 4 or 5. I still got like the Wheaton and the PAAS out of First Majestic. I think I got New Gold Ego. I bought puts in the HYMC the other day. That didn't work. So I'm gonna just stay away for trading purposes here.
All right. So I'm just gonna hodl. I'm gonna hodl my metal stocks. No, I'm gonna sell them when they hit the targets. Why don't I just do that? You know,
targets have been hit though. In the individual stocks, how many targets are you trying to hit? Like 4 or 5 targets have been hit.
Yeah, we're big targets. They were big bases, Strazza. Remember, look at that Buenaventura base is like, right? Like, think about it like that. All right, let's go.
If your price targets haven't been hit yet, you might want to lower them.
Okay, let's go.
Go what?
Kenny.
Oh, sorry.
It's been a long time coming. They ain't come from my club, they tug it. Putting up numbers, 99 pounds, and I still kept it 100. Hold up. Yeah.
What the hell?
Kenny. Bring him out.
Let me in.
I'm trying. There we go.
Go.
Kenny.
What's up? We were just talking about. So I don't know how much money you have in crypto. We're just talking about crypto and silver. Right now, whatever I have in crypto, I would willing to let it go to zero just to wipe out the entire industry and let everybody buy what really counts. Silver, 20-year breakout. Let me tell you, friends, 80 gets you 120. Don't sell. I know.
Why are you hating on crypto? What does crypto have anything to do with? Dude, by the way, silver is $5 trillion in market cap. That's more than double the market cap of Bitcoin. Just 2 seconds ago, silver was half the market cap of Bitcoin. Now it's twice as much the market cap of Bitcoin.
Right. So
that is your stat.
What I'm encouraging you to do is dump all your crypto and keep buying silver because one's real and one is air. So do what you want, friends. And again, if somebody said, Kenny, would you sacrifice your Ripple and your Crypt and your Tron and your Algorand and your Bitcoin and your doggy coin for the whole industry to go away? Where do I sign? Because again, I'm not a fan. Not a fan. I never will be. I own it, and it's just a joke. It's amazing how the society was convinced to buy bottled air. But again, I guess we're living in Spaceballs. That's a good air, man. All right, but I don't want to know about it anymore because I've been doing some TikTok. And everybody's always asking me crypto, and again, my attitude is, listen, if you convince enough people something has value, then suddenly, woof, it has value, and then everything goes up. Rally. Hey, look at that thing. It keeps going up. Let's buy it. Welcome to crypto. It's a joke. It's a joke to me. I'm sick of it. But now that silver is back in a big way,
I take it very seriously. I have a dick butt as my profile on Twitter, and I take my NFT portfolio very seriously. So I'm very offended that you are, saying such harsh things. Very harsh this morning, Kenny.
Yes.
The crypto community. We're just a bunch of nerds. Leave us alone.
I'm the biggest nerd of them all.
You're too cool.
I go to coin shows where I'm the young buck in the room. I'm like, these guys are 80, 85. There's 100-year-old guys there, and I'm talking to these guys, and I'm like the young guy. So I've been nerding out my whole life. I mean, I'm surrounded with toys and all kinds of stuff. I just don't get it. I'd rather buy a Star Trek action figure than fake currency. But this blockchain is real. Yeah, come on, the tokenization of society. Ah, shut up. Shut up.
So much anger this morning, Kenny. I feel very like offended. Like if this was like a corporate work environment, I might need to see HR because you're being very mean to me.
Wait till I slap you on the ass as you walk by.
You know, you really enjoy that. You know. So, all right.
Let's talk real.
You know, big move in financials yesterday. JP Morgan smoked. Regional banks, you know, losing those new highs.
Just like I said.
NASDAQ in the red. I don't know if that's a glitch, but I do see it in the red.
Very bearish again. You know, again, we're seeing all the signs. JP Morgan yesterday, phenomenal short. Congratulations, everybody. If that was your first trade with me, earnings season is here. And the first trade was Delta Airlines long, and of course, JP Morgan short. And I've got to tell you, that action yesterday in JP Morgan, it made me super bearish the entire market right there because there was nobody there. Nobody's buying JP Morgan. And usually there's a dip buy. There's usually a fight at some of those levels. And once it broke under that 317.50, nobody was home and just drifted away into the close. Very, very bearish tape. And then you had the UVXY, which sprung to life, which brings it all home. So right now, I came in today, you know, we're shorting some stocks. And again, for you silver lunatics out there, sure, right. You gone parabolic. I'll be looking for a hedge. I've shorted AGQ the last couple of days for a couple of ticks. But, man, you don't want to get in the way of a 30-year breakout, and especially 80 getting this 120. Again, huge fan of silver, obviously. But, you know, going back to the bread and butter, make that money on these earnings reversals, and then you have cash to play with anything else, especially if you, you know, are swinging or owning stocks. That's the way we've been doing it since the 90s. You make some money intraday, and then you go back to, you know, looking at your swings and you're owning stocks. You want to do some stuff, make that money, and then use the house money to buy some other ideas.
What's on the move today? Single stock.
Right to the banks, my friend. We're looking at Citibank, gapped up a little bit, just held VWAP. You got a little faux show bro action in that. Let me show it to you. Hang on a second. And bang. We're going right to banks, Wells Fargo. So here is, if you guys see this screen, pull it up there for me. There it is, my friends. So again, there's your knee-jerk reaction. There's your fake them out, shake them out. There's your 1 minute multi-day VWAP reversal. So that's the trade that we've talked about now. That's 1,180 in a row. That has been a setup for a winning trade. But now, if you're not trading pre-market, I look to take the other side, just like JP Morgan. Couple of reactions to the upside. Now we wait to see if it breaks back below today's VWAP and prior day VWAP and retest that low. So now I'm kind of stalking the Citibank for a possible short. And back to Bank of America. There it is. Once again, not in this one. I didn't trade it, but above the VWAP, you roll over. There's the finger of God. We talked about this at the chart summit. 1 minute multi-day VWAP reversal to the downside. So wonderful action pre-market. But if you are nervous about trading pre-market, then don't, because you usually get another move near the open, and then between 9:45 and 10:30, there's
Let me ask you something, Kenny. What would make anyone nervous from trading pre-market, out of curiosity?
the illiquidity of it. You get it wrong.
But you set limit orders, don't you?
You can't. Well, you could send limit orders. You just can't have any stops. So you have to be there. Yeah. So if you're like us and you're sitting there with your fingers on the button and you're ready to do something, also sometimes they open the spreads. JP Morgan was very difficult to trade in the pre-market because it just was opening spreads. And even though the stock went above VWAP, if you didn't get that print, the bid did not come along with the offer, and the trade didn't really do anything, even though the spread opened up for 2 points. But if you were on the offer and you sold into that move like we do, you caught some of that. You caught some of that move. So trading pre-market could be, you know, a detriment to your whole day, and you don't want to have a bad trade in the pre-market and ruin the whole day, especially with the activity that we've been seeing all day. This is again the greatest market I've ever seen to trade ever. It's so good.
But you're leaning on the bearish side.
Oh yeah, obviously. And again, here's the QQQ. You know, I usually just trade Qs, but we already had Fat Finger Freddy show up to the upside, so I got to take that into consideration. The short has worked already, but you're already in the middle of it, trying to attempt to rally. But my main thing is this UVXY. 2 days of strength in a row is super bearish. This thing is it's usually just drifting down. You guys know this. We've been shorting it since the 60s. And if you guys are still short, congratulations. Nice trade. when it shows strength, especially pre-market, and if it shows strength 2 or 3 days in a row, that is an indictment on the health of the market. And again, short-term health. Again, I don't know what's going to happen 2 years from now. We're living in the moment, baby. And the moment right now is bearish. That JP Morgan action was pretty scary. And UVXY showing us that this market, the sellers are out and they're out in force for the first time. So
anything on the tech side moving?
What there's info INFY. I'm not too sure exactly what it is, but
yeah, Infosys.
Yeah, they reported.
Indian.
Yeah, they reported earnings. So again, little popping and dropping, and I'm looking for a short. This thing already had a sick move from 7.
Dude, Kenny's day trading Indian ADRs in the pre-market. This
There
is
you
what
go.
we're talking about here, ladies and gentlemen. Kenny Glick.
If it moves, I'm involved. A nickel dime gets sold in the park. I want in. You guys got fat when I was away. Crazy. So yeah, that's it. I mean,
I like it when Kenny goes walking through the charts.
Yes, that should be a new segment, by the way.
Walking through the charts where you do the entire video and Christopher Walk, right?
Kenny and I met in '87. I was an RSI guy. Now MACD, be damned. VWAP all day. It's crazy. That's my time, everybody. Don't forget to tip your bartenders. If you're drinking, don't drive. If you're driving, don't drink. Take care, everybody.
Dude, so good. So good. I mean, what else is there left to say? Legend. When people, you see people on the streets, they're like, yo, you know Kenny Glick? It's like, yes, I know Kenny Glick. A little too well, maybe. Man, that guy is the man.
We'll see Kenny tomorrow. And actually, I meant to ask. Kenny's going on Yahoo Finance today, I think. So I don't think he's doing his live show at 11. He'll be
Yahoo Finance.
He'll be in the city.
You could have been here with us, but you went to Yahoo Finance. No, I love those guys. I'll be on Yahoo Finance like next week. Strazza, I wanted to we got a couple. I want to get to the beat report, but I got to do Josh and Batnick's show tomorrow.
Yeah.
What should I talk about?
The new Beat Quarterly. That's what everybody's talking about right now. I mean, the feedback we're getting from this report just in a day has been just wild.
Throw it up. Let's see it.
Yeah. This is the quarterly beat is something we have been working on internally for almost 3 years. This is basically our version.
No. I thought he was on the phone.
No, he is. Wait, we don't have. I have today's daily beat. Rick, can you grab the quarterly beat? I don't have it handy.
You could also sign up for it, get it emailed to you. We have a landing page for it, Spencer, if you want to just share that. Another email going out about it today. But basically, these are all of the biggest earnings trends, shifts in sentiment. We're pairing that data with the fundamentals and also for sure the technicals. And then we're just highlighting some of our best charts and some of the big earnings standouts, as well as industry group deep dives, right? We're diving in, showing our own proprietary reaction score, some other things that we do. Just telling the big stories of earnings season. This thing is about, I think, 60 pages. It'll probably be longer in the future, but it gives you a great rundown of what happened last quarter as we enter the new earnings season, which is now upon us.
I got to tell you, the fact that people could just click this link and download this report is a joke. I don't even know if you guys should be just giving this away like this. I mean, I'm down, fine, whatever. Give the people, let them see it. But this is dope.
That's what the marketing folks said. They're like, wait, this is not free. I said, yeah, it's got to be. It's got to be free. So look, the paid stuff is going to be a lot better than this. We're actually taking this research and all of these data points and building out a long-term portfolio of our favorite stocks that we're in for the primary trend. So we are combining for the Beat Report model portfolio 3 main things, which is fundamentals, right? We want a big, appealing growth story, right? That's going to run and have legs for years. We want to know that the chart is confirming that fundamental growth story, right? Typically it comes in the form of a big textbook, bearish to bullish trend reversal, rounding bottom, big base, whatever, right? So we want to see that trend shift in the technicals. And then we also want to know that the market is finally at a point where it's rewarding these stocks for their quarters, every 3 months, because that's a big part of it. And earnings every 3 months tends to be that big catalyst, right, to keep sending the best stocks higher. If you look at the best stocks, Palantir, AppLovin, any of these, Robinhood, any of these top S&P, they consistently beat earnings, right? And then gap higher and run 10, 15, 20% on the heels of earnings in bull markets. Those are the runs that we're trying to catch. So we're pairing earnings sentiment, fundamentals, technicals. You get it all here. For long-term investors, this is really just a dream. This is how we do things, right? This is how the sausage is made in my office for a long, long, long time now. Fusion analysis, they call it.
Yeah, I don't really like that name.
No, that's just what it is. Not our name. This is similar to the William O'Neill IBD kind of strategy. It's not uncommon for people to build a universe based on fundamentals, right? And then use the technicals to actually make the important decisions. It's like that on steroids is really what we're
I
doing.
like how you
here.
said that. Use the technicals to make the important decisions. I like that. All right,
Well,
so
we're
I'm
not
going to talk
crazy.
about that. All right, send me whatever chart you think would be the best to show the guys the beat report, and I will. And then all right, so what else should I talk about? So guys, click that link. The fact that you could just download this quarterly report is ridiculous.
It's in the chat on YouTube. It's pinned to the top.
So what should I talk about? Because they're gonna, I have a certain standard, I guess, that I've had on that show over the years. So I got to bring it.
I think they want to know about the beat quarterly more than anything.
All right. There it is. You heard it here, folks, right? So when Josh is like, why is JC talking fundamentals? I'm like, because Strazza told me to.
Wait, do you want to pull up the daily beat from today, Rick, wherever that is, slide 6, just to sort of put yesterday's reports into context? Because again, if you had looked at JP Morgan at 9:29 yesterday,
throw up the chart there, slide 7. Throw up that chart.
Oh yeah, I mean, sure. The chart
worst reaction in 8 quarters.
So the reaction says it all. The number is, I mean, Strazza said it yesterday during his show, especially with the banks, the numbers are never going to be especially interesting because they know what they're doing. And it's extremely rare for a bank, especially a big bank, to like dramatically exceed or miss expectations, right? So
I would big banks, Spencer, to your point, are in the best position and well known at this point for managing.
Right. Yeah, they
the big 6 banks, along with the Mag 7s, have more of an ability to kind of manage their earnings than anybody. So it's not
the numbers are
it's unusual that you see them miss. They usually come in, they beat by a cent. You know what I mean?
Yes,
on both top and bottom. It's not uncommon at all to see.
So the numbers are cool, but we care more about the reaction, and we care about this. We care about this 4% move yesterday, right, which dragged down the entire index, and now it sets the table for today and tomorrow. Because today you got what? Today you got Bank of America. Today you got Citi, Wells Fargo. Yeah, Bank of America. Tomorrow Morgan Stanley, Goldman Sachs. Right. Friday the regional start to report. So this matters. This reaction matters. Numbers don't really matter. Reaction does.
Yeah, this is an interesting one as well. And I totally agree with that. It's not so much like the earnings or the revenues or whatever. It's, what did the market think? Right. And that's why I think the beat report is so cool. So make sure to download that. What about Rick's chart? Is this slide 9? Throw up slide 9 showing the gold Dow ratio. Oh man, brings me back to my roots.
What is this?
Back to my roots when I was a gold bug back in the 2000s. This was a big one. Dow gold ratio. Classic old school gold bug chart. You take the Strazza thing off so you can see the lower left of the chart.
Yeah. Whoa. Okay. This goes back to the 60s. Not every day you see a chart that goes back to the 60s.
That's right. Every day I do, Spencer, but not
every day do we. Okay, this is the Dow versus gold versus the Dow.
So you got the Dow in blue. And you could see how during the 1960s until the year I was born, right? Notice how when I was born in 1982, stock market ripped.
Oh
You know,
yeah.
some would say that's a coincidence. I
Yeah.
don't know. I don't know that it is. Nevertheless, 1966 market peaks. You go nowhere for 16 years. Then JC's born, and then everything just breaks out from there. But notice how that period from 66 to 82, you know, gold's dramatic outperformance relative to the Dow. You see that in black. And that started to roll over before before the Dow broke out after 1982. You started to see that deterioration in the gold Dow before that. And then also in that 2000 to 2013 period, they were calling it the lost decade, Spencer. This is what they were telling us. I remember it vividly. The lost decade for the stock market. And then during that period, notice how gold, there in black, massively outperformed stocks, right? So then we had that decline, of course, since that peak down to the lows in 2018 on a relative basis. And here we are, you know, making new decade highs in gold relative to the Dow. You know, so what does that suggest for the Dow on an absolute basis? You know, something to think about. I think it's a great chart.
Can we keep it up for a second? It's interesting how different the bottoming process in gold has been this time versus. I mean, it basically it makes the late 90s look like a certified V bottom compared to what we've been through.
Well, this is that gold Dow is on a relative basis, so it's not on an absolute basis, right? These are rounding bottoms.
Oh, I'm sorry. That black chart. Basis. Oh, I'm sorry. That black chart is a relative chart. Got it. My bad. Okay.
Yep. So the bottoming process is basing in all of those examples, actually.
Okay. Yep.
Yeah. So here's your little history lesson. You know, if you don't study market history, you know, what are you doomed to repeat it? Is that what they say?
Yeah, I guess.
I mean, I think that is what they say. They don't say that. Oh, okay.
They do, I guess.
Another thing that I would watch out for, not to be Mr. You know, be on the lookout guy today, but I guess I have been, so I'll own it. You know, is really that dollar above 100. The dollar above 100 is a big one for me, guys. So, you know, if you're gonna ask me, if you want to throw up slide 18, just to remind everybody what's going on here. You know, a breakout there, I think could be. I think that could change a lot of things. I don't think it's good for precious metals. I don't think it's good for the international outperformance around the world. I don't think it's good for stocks in general. So I would keep a close eye on the dollar. It's not above 100, but that's a big one. That big, you know, 8-month base in the dollar index. You know, something that we haven't seen. Something we haven't seen in a while. And what we know is that all of these assets like it when the dollar's declining. They clearly like it when the dollar's going sideways, right? So down or sideways, good for stocks, good for rocks. But up, I don't think that's good.
Better for certain stocks. And better for bonds.
Generally speaking, I just don't see that as generally good for stocks. There might be some stocks that outperform in that rising dollar, you know, like staples, like energy, right? So I think a rising dollar makes sense with a basket of energy and consumer staple stocks. I got to tell you, makes a lot of sense. I don't know if that's how it's going to play out, but if the dollar's breaking out, those are the stocks I want to own. To Spencer's point, some stocks will be doing well. So there's some bearish things out there that could potentially transpire that I think are worth monitoring.
Yeah, and bonds, right?
That's the other one, man. You know, if energy is going to go, are bonds going to go too? Because I got to tell you, if bonds, energy, and the dollar are all moving higher, I got to tell you, S&Ps are probably getting smoked. And from a seasonality standpoint, we're going to be with one Jeff Hirsch next week. At the Portfolio Accelerator in Miami. If you are not going to be there, your life has gone horribly wrong. It is going to be fantastic. I was talking to some of the guests who are going to be there, and it's going to be their first accelerator. And I was like, you are in for a treat. It is really good. So I'm very much looking forward to it. And we're going to be in Miami, and the Hurricanes are in the national championship game, and we're going out on the boat on Tuesday night. Like, that's going to be sick. So if you're not going to be there,
on that note, we are at capacity for Miami next week. If you want to be at an event with us, though, be at our next event, the one after Miami, which is going to be in Nashville in May. If you want to come hang out with us for a couple of days, 2 full days of roundtable discussions, presentations, just nerding out about the market. I'm going to put the link up on the screen. And we have fun too. We do fun stuff. We're going on a romantic sunset cruise on Tuesday night. Very romantic. There will be shrimp cocktail, maybe some chicken fingers.
There will definitely not be chicken fingers.
The point is we do fun stuff.
Throw the chicken fingers at you.
Fun will be had in Nashville in May. If you want to be there with us, the link is up on the screen. You can apply. We do keep it small, intimate by design.
Because we're working.
Right.
You have to apply. We might not want you, but the important point here is that Miami Portfolio Accelerator.
Might not want you.
Don't say we might not want you.
But you could say apply and say. But the Miami Portfolio Accelerator is probably going to be the greatest portfolio accelerator in the history of portfolio accelerators. Yeah. And when the Hurricanes win the national championship, we're all literally going to party like it's 1999.
Harminder says he'll be at PA Europe.
Yeah,
I don't know.
Maybe
we don't know. I probably won't, Harminder.
I'd rather do Amsterdam than London.
Yeah, we'll see.
Maybe.
Or Dublin. Dublin would be cool.
Yeah.
That's a shorter. A lot
of golf. Strazza's like, I'm bringing my clubs.
I don't know, man. It's cold over there, isn't it? It's really cold.
It depends when you go.
I'm freezing my ass off in Florida right now. I mean,
I heard
it's terrible here right now.
It's actually pretty warm up here.
God.
So nevertheless, like I was saying, one Jeffrey Hirsch is going to be at Miami for the Portfolio Accelerator, and he's bringing an almanac for everybody there. How about that? Shout out to Jeff Hirsch. Thank you. I don't know if that was supposed to be a surprise or not, but everyone's getting one. So the best 3-month period of the year for stocks is between November and January, right? Well, we are officially 80% of the way completed with that best 3-month period of the year. And then you get that February hangover. You know, Strazza's over here partying like it's 1999. Well, how did 2000 and 2001? How was that hangover? Right? That's serious. You need greasy food. You know, you got to go exercise. You got to smoke some pot, have some sex. Like, those are the cures for hangovers, right? You got to do all those things. And that takes time. It's a lot of steps, right? February is that, on a short-term basis, that hangover after that 3-month period, right?
Hangovers will probably be had in Miami, yes.
Yeah, but in terms of market, just generally speaking,
that's
February
not what he meant, Steve.
Struggle city.
Jeez Louise.
Market hangovers?
You buy that March dip into the spring highs, and then sell in May and go away, and the whole thing, right?
I think we're about to ramp here, though. I think things are looking all right for now.
I'm just fine. Nobody's saying that they're not all right. The S&P is in all-time highs 2 days ago. I'm throwing out some things that are changes in characters. All
you're spooking us here.
No. You own energy stocks. If energy stocks rip and the dollar rips, your energy stocks are going to do great.
And hey, check out China. They pumped the other day. Trump came out with his big Twitter stick and was like, and then they were like, to your we're going to keep rallying anyway. Did you see that? He tried to throw some water on the China fire. I was on an afternoon meeting. I'm like, guys, look at China. They look so good. Then I'm like, oh shit, you see what Trump just tweeted? 25% tariffs on anybody who's friends with Iran. You know who he's talking about, right? That tweet was meant for one country. But China, the resilience, right, on that headline, I think really stands out. Alibaba completely ignored it, which is awesome. Have you
noticed, Strazza? Have you noticed over the last 6 more months, headlines that you would think would be bearish for China end up not being? It's not the first time that happens.
Yes. We had a good conversation about it. I don't know if it was the last PA meeting, but Edward was pointing out.
Isn't he on his phone? Why are we keep losing Strazza?
How Alibaba basically came out and pre-announced a bad quarter, and the stock didn't even go down. So that's the kind of stuff that you see at big turning points. And if you look at the chart, it kind of checks out, right? That's beat report stuff, by the way. When you're seeing change in sentiment, earnings sentiment, and even broader sentiment, right? In other words, bad news can't knock these stocks down anymore. Okay, then you look at the technicals. You have a massive trend reversal there, multi-year base. It's already broken out, hit a target or two. And then you look at the fundamentals. I mean, this is Alibaba, the Amazon of China. Doesn't get much better, fundamentally speaking. So we're checking a lot of boxes here in the Mag 7s of China. Baidu's another one that really stands out. They can't knock it down. Just looks fantastic. So I think it's encouraging. But then you have other ones, JC, right, that you still kind of have to stay away from. We took a swing at JD, got a failed breakout there the past couple of days. PDD, you can't touch with a 10-foot pole. This one is just...
Dow.
Yeah, the Pin Dow is a tariff disaster. That's the one that gets hit the most. They operate that site, the Temu. So they're doing a lot of business.
It doesn't go down. Yeah, and yet it doesn't go down.
It's been sideways for years. If you're zooming out, I'm saying it's still in this big range,
yeah, that's
right?
what I'm looking at.
Yeah. Well.
Yeah.
So they're all
down.
Some are better than others right now, but I think broadly speaking, China as a group continues to trend well in the face of some negative sentiment.
What is the best energy stock?
I think you keep it simple here. Might have a better idea than me with something spicy, but what I'll tell you is the boring stuff. I like Exxon. I like Chevron. I like a little Schlumberger. And I think you could even do some of the shale operators and just remove the whole Venezuela thing from the equation. ConocoPhillips, EOG. Well, Conoco wouldn't be in that category, but yeah, maybe Devon. I see in the chat, EOG coming off the lower bounds. There's stuff you could do, but I would go with the big boys here.
I just looked through all of the energy stocks in the S&P 500. I just did it right now.
Oh, yeah, all two?
No, there are
4,
officially
8, 9.
There are officially
11.
1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21.
Wow, energy. Look at you, energy. Huh.
How many are making new highs?
Sounds like a bubble in energy if there's that many stocks in the S&P 500. How many are making new highs? 1, Exxon. If you're talking about new 52 weekers.
Valero.
Oh, yeah. Hey, those have been good. The refiners have been good. I bought some Phillips 66 the other day. Old PSX.
Throw up slide 2, please. Throw up slide 2.
And then we're doing recess.
This one is not making new all-time highs, but, capital B, but I like big butts. And this one is a big butt, not all-time highs, but big
we
base.
Love this. We love this.
Looks like Buenaventura before it took off. Tell me I'm wrong.
Big dividend too. I'll give you one better, which is Williams. Right, it looks just like this, but at the upper bounds of a major base breakout level.
Dude, Weitzel loves that one.
The WMB is great, man. But like these are coils, right? Now in some steady uptrends, and a lot of these coils have been in place for a year or two.
You're getting a 4.2% dividend yield.
What do you think the level is for KMI? Because I think it is one you want to buy on momentum. We have it on a short list. Now, if you drop that VWAP from...
drop a WAP. Yeah. Drop the WAP from the highs, and there's your entry, right?
And you're right there, though. I hate seeing that the way we've been dancing around that VWAP, right? It tells me like I need a different VWAP or just like a polarity level. I don't know. You could use the pivot highs here because we're on it right now, JC. That VWAP, we're literally sitting on it. It comes in at like 27.25. So I would look at the pivot highs called 28 here. Right, the high from just earlier this year in December.
But it's been really whippy, like you were saying, been really whippy against those, against that VWAP, right?
This is one you probably just want to buy the common and enjoy your little dividend, and it'll have some juice there if it makes another leg higher.
Let that shit compound.
Yeah, right. Why not? You have some
wrong.
really good yields in some of these energy stocks, dude. Even some of these international energy stocks. I know, like nobody wants the Petrobras because it's been such a laggard, but hey, a double-digit yield gets my attention every time when energy stocks are just entering a brand new bull market potentially. No?
You know, there's something for what Strazza is saying, because we all have different strategies and we all have different goals in different accounts. And for a retirement account, you know, listen, everybody does different things with their retirement account, but generally speaking, this makes sense to me. I like that idea.
A little dividend will do you good, especially with the bond market the way it is these days, right?
Yeah, how is the bond market?
It's not great, but hey, TLT is kind of poking its head. AGG, biggest diversified bond fund, kind of trying to make some new highs here. So,
All right, let's do some.
but
recess.
I would rather have the big yields in the stock market for sure.
We should mention just for, and not that you guys don't know or even care, but pretty much every stock we just mentioned reports earnings in the next 3 weeks. So just have that on your radar.
Get your beat quarterly.
All right, let's do some recess. Let's do some recess and get out of here.
Woo.
Go ahead.
I went to Everglades City this weekend. JC had a famous date there, in a past life. And it was just good to see this historic Florida town. It has great history as it was a stone crab capital in Florida before other places took that over. Also famous for drug smuggling. And now it's just gator tourism. So we went to some hole in the wall bars. We went to Wild Man's Pizza, Pasta, and Pythons. Did you know? So Florida has the FWC, the Fish and Wildlife Commission, is they're as powerful as the police in Florida, and we have these strange rules in different areas where, if and when there's an invasive species, we're allowed to kill it, but in the most humane ways. So people in my neighborhood in Key West used to shoot iguanas, but you got to shoot them in the head or you get arrested. Lionfish, you'll see just thrown out on the side of the overseas highway when you're driving down through the Keys. In the Everglades, they have, let's call it a unique situation with pythons. So they put a bounty on these things. We don't want them. They're not supposed to be here. A couple crazy Florida men released them from their trailers back in the day, and now they're everywhere. So you get
hear this Florida man shit? This is crazy.
So listen, these people do this for a living in Everglades City. They get paid $25 a foot. I was talking to some guys. If they catch a couple pythons in a day, they're going home with $1,000 because these things are 25 feet long. You're getting $500 for bringing a dead steak. But here, can you hear me? Here's the craziest part about it. How do you think you have to kill them to get that money?
Humanely.
You can't just shoot them. You can't even shoot them in the head. You have to stab them in the brain with an ice pick. Jesus. I'm dead serious about this. or you don't get paid. So I thought that was an interesting thing.
That's the humane way, is the ice pick.
You got to turn in the alligator with an ice pick stuck through his brain.
No, but they're pythons, dude. So think about that. You got to grab them with your hands and stab them in the head. I mean, talk about the most dangerous job in the world. But that was, the things you learn when you travel throughout the great state of Florida.
Wow.
Yeah.
All right. My recess is I finally bit the bullet over the weekend. I watched that movie, that Dumb Money movie about GameStop.
Oh, what'd you think?
It was all right.
You're 5 years too late. What took so long?
No. You know what aged horribly is the postscript, at the end when they say kind of how it all resolved. That aged terribly because they talked all about how bad the Robinhood IPO was. True, how Vlad and the guys are no longer billionaires. True at the time, very much not true now. Melvin Capital shut down. Also true, and the guy was so destroyed that what he did, he went out and bought the Charlotte Hornets. That's how hurt he was by the whole thing. Gabe Plotkin. So the whole, and then the best part was when they say Wall Street will never again ignore the power of the retail investor, which is complete No,
we ignore it every day. And good for you, Spencer, for seeing through that bullshit, because this movie was released literally at the height of this whole eat the rich trend, right? And it was pretty terrible the way they even portrayed some people who I know personally, I think was disgusting. And good for Robin Hood for bouncing back. And also, I'll just tell you, I have never seen a man make more money, really two men, because one of them paid the other, but than Gabe Plotkin. At any of the places that I've worked, I've never looked at someone's comp and my brain literally exploded. With Gabe Plotkin's comp, back when I worked at SAC Capital, he was making so much money for this hedge fund. I would look at what we were paying him every year, and my brain would just explode.
Yeah. It wasn't
He's
a bad
fine.
movie.
He's fine.
And you know who's in it for 2 seconds? I had to pause and rewind. Our friend Aubrey Wald makes a quick TV cameo.
Isn't JB in it? JB too, right? Scott's in it. A lot of them.
I don't recall seeing Josh. I definitely saw Ari. But it was a fun movie. But I thought the postscript aged just horribly. It's just terrible. Everything was wrong. But at the time, I thought it was fun. You know.
Love that you just watched that.
Yeah.
Strazza, throw up. This one's for you. Throw up slide 9. So I picked this one up yesterday on eBay. Dude, I got it for $36. $36. I got this on eBay.
Huh?
Dude, I think that JC, I think these will be worth an inordinate amount of money one day. Like I think you need to keep them in cases and like preserve them and let your kids do what they're going to do with them one day. But like the collection that you're building is so ridiculous. I think you just have to make sure you take care of them. I think these are going to be worth a lot of money one day. I know that's not why you're doing it, but this is cool.
So this is from this is Life Magazine, 1896.
Incredible.
Okay. This was right at the peak of the great bicycle bubble, right?
Yep.
Where these bicycle stocks tripled. They were like 100 bicycle companies absolutely ripping. It was the meme craze of the day. It was the
there were no cars
of the day.
There were no cars at that point, right?
There were no cars. Well, that was the problem. Is that the motorcycles and the cars came immediately after they figured out how to build bicycles. So that was the problem. The cars,
so funny.
The television, what is it? TV killed the radio star, right? Like that whole thing. This was that.
Great song.
So these stocks, so like 70% of these British bicycle stocks all went bankrupt. Like just, it was the arc of its day, these bicycle stocks, and they got smoked. So anyway, Life Magazine, 1896, about all everything. I mean, just classic contrarian nature. Even in the 1800s, these journalists were nailing the tops here in Life Magazine. $36 I got it for. Not bad, right?
What do you think? You think that's an original mongoose right there?
Yeah. It's a GP performer. That's what it is, I think.
Huffy was the best stock in the S&P 500 in 1896.
On the topic of bikes, I just listened to a good episode of the Founders Podcast about the Michelin brothers, who basically reinvented tires, and they partook in all of this, and they were right there for the bike mania, and then they were like, oh shit, people are making cars, we should probably make tires for cars too.
They were the picks and axes play of the day.
The tires were part of the great bubble because they had just they had just invented some kind of tire that worked for the bicycles. Like that tire was invented then. That was part of it. Throw up the next slide just so you can see. I got some. I haven't gotten them yet, but I got some old advertisements. From the 1890s. There. How much did I pay for these? I paid $22 for these.
Did you guys know there are different grades of rubber? It's like gold.
Old.
No, I didn't know that. The wheels of 1893.
It's like bicycle trading cards.
I got it for $22. Listen, you can get some good stuff on eBay, as we're all well aware. I got all kinds of stuff.
Now answer my question. Are you preserving these? Because you sell these to a museum one day or something. Okay. You got them in plastic?
Yeah, like, look. So what do we got? We got Time Magazine from
Let me see it.
1975. This is
okay.
This is a great one.
That's how you keep them? What are those? Just big plastic sleeves that they're in?
Yeah, I got this one's. Well, this is one of my most expensive pieces. This is the Newsweek Bitcoin, literally right at the top. This is
2017.
No, this is a 21 top.
21, sorry.
This is April. No, yeah, right. April 21 says 4/2/9/21. That doesn't make any sense at all.
4/29/21.
Oh no, April. No, it's definitely 2021, but I can't tell which one's the month. And then of course this Newsweek here from 1937.
JC, are you banging into MicroStrategy and Coinbase calls here, or do you think we have to wait?
Well,
Like
I'm
how-
long coin already.
How hard do we press the gas on trading this little? It's really just a counter trend move.
Dude,
at
I
this
got to
point.
tell you, not to, toot our own horns, but here we were in the last week of December talking about the potential whipsaws and the whipsaw hunting season, and people thought we were crazy, and then here you go.
It's happening.
I'm not in the MicroStrategy, but I am in the coin.
You can just buy some MSTU and just let it ride.
I think I'm going to buy some MicroStrategy today. I'm going to buy some today.
We bought the calls live on the open bar yesterday. If you guys want to see how the sausage is made, go rewatch that show. It was great. I also got stopped out of my short put position in Microsoft live, so that was fun. But yeah, we did some real trading. I think the
I'm gonna buy
cryptos.
some of this MicroStrategy today.
I think you get follow through here, and like depending on how you structure this kind of a trade, you a day or two of follow through. If you're long calls or something in something like this, it's at 200. You're printing money quick, and then you're out. And it probably needs to consolidate more.
180.
I think the big level is literally getting taken today.
This is your gap and go. So I think you could even use like today's lows or yesterday's highs like a stop. Like if you close that, then all bets are off. But if you're going, you're going.
Couldn't agree more.
You can even set like a time stop where if this doesn't go by the end of the week or whatever, then I'm out. Like it's either gonna go or it's not.
Which is good policy, especially if you're trading like weekly or monthly calls and something like this. You do want to have a time stop too. And this is really the confirmation candle, right? This little gap up today. This is the confirmation candle. You drop a little VWAP from the pivot highs, boom. You had a clear little resistance zone there, past few weeks. Looking good. Solana looking probably the best of the majors.
Crypto plunged up 6% in the last 24 hours.
See, that's good. That's the kind of risk appetite, confirmation that you want to see too with these things coming off the lows. I think there's something here for crypto. I think it's very tradable.
Every year, guys. Every year. Strazza, when you first met me, I bet you thought I was crazy on that.
What, the whipsaw hunting? No, I've seen it work. I've seen it. Well, when I first met you, maybe, but I've seen it work too much now over the years.
Every year, it's the same. I mean, there's always something every year.
We talked about financials too, by the way. Remember? We talked about the banks reversing hard. So, all right, really. Can't wait for Miami, guys.
Yeah.
Hey,
couple days.
Hey, shout out UConn Huskies. Told you they weren't going to lose another game. Finally beat Seton Hall last night.
Hoops, huh?
Just college sports, really, really good for me right now. We might do a double this year. In my world, we might take them both. We might take both championships here. So very excited. Very excited.
Wednesdays are a busy day for us in Stock Market TV. We have Sean will be live at noon. What are my options? Jeff Mackey will be live at 1. Jeff's going to talk about his biggest takeaways from this big retail conference that's been going on the past couple of days. And then Riley is Godspeed today at 5. So busy day for us, and that's what we got. So we'll be back tomorrow morning. We'll have Jeff Mackey will be on the show. Sean will be on the show. And it's going to be a good day. So thank you guys for watching. Drop us a like if you haven't already. Go make some money. We'll see you around.
Adios.
Later.
I can't take no loss. I don't even know what it costs.